Welcome to my market update video. I'm going to take a look at the price of BTC with you. I haven't done this in a while because I was opening my Stoic philosophic school. Unfortunately, it is in French, so I'm not sure if anyone listening to me in English is interested in a French philosophic school. It's Stoicism. It's a Stoic school. So, well, that took me quite some time. I had some other stuff to do. I have some legal questions that I have to look into, since in my philosophic school of life, I'm talking more openly about a lot of subjects, and I have to take care of the legal stuff to see what I can say and what I can't say under my jurisdiction. But anyways, I don't think you're too much interested in philosophy, so let's take a look at the chart. What I can tell you straight out before looking at the chart in detail is that from an idiot point of view, nothing has changed. Everything is still the same as when I did my last video. That's why I didn't do an update too, because I have had nothing new to tell you from my last video. So we are still in a corrective phase. It is wave 2, and that corrected phase should cease anytime now. It could already been over, but it was not over. It went a little lower, and now I'm waiting for an impulsive wave 3, and until that happens, there's nothing else important for me happening. Okay, we are going to take a look at different technical indicators. I haven't looked at them in a long time, so it is new to me. I will have to need some time to think about the current situation, if it's bullish or bearish, positive or negative. I will have to take some time thinking about that, because I haven't looked at it for maybe 1 or 2 months. So I don't know that. The only thing I know is that I'm expecting an impulsive wave 3, and that's the only thing that matters to me from an investor point of view. I'm not taking about playing the small moves. I don't do that. Okay, why don't do that? Because Bitcoin was not designed for that. Bitcoin is unseasonable money. It is money that it is something that nobody can take from you in the outside world, that never existed in history. It is not unseasonable money if you play around on the market, on exchanges, with brokers and so on. Then it's not unseasonable again. It's just an asset as any other asset. I like Bitcoin for what it was designed. I need Bitcoin for what it was designed. Okay, and as long as possible, I want to be long. As long as I can. You always can be long, but there will be time when you get a correction for maybe 99%. Okay, we can talk about that when we look at the elite wave. But for now, I'm expecting the resumption of the impulsive wave, which will be wave 3, and that's all that matters to me. Nothing else matters. Okay, all the small indicators fun to look at, but they are not important. The only important thing is, from a technical point of view, where are you? That's the only thing that matters. Okay, if you want to trade at all, if you don't want to trade at all, that's fine too. Just hodl all the way, all the time. But there will be times where you lose 99% of your wealth. If you're fine with that, go ahead, hodl. I want to be long in a bull market, and I want to be short in a bear market. And that is not even true. I will only go short in a bear market in case that I think that the political climate is good enough so that I can go short. Because taking short is extremely risky, because you have to rely on a third party, and I don't want to trust anyone. Okay, that's what Bitcoin was designed for, so that you don't have to trust people. When you start playing around with brokers or exchanges, you start trusting people, and Bitcoin was never designed for that. Okay, so when a bear market starts, I will judge the climate and take the decision if yes or no I can go short. If I cannot go short for political reasons, I will not go short. I'd rather lose 99% of my wealth than go short if the political climate won't allow me to go short. Okay, and all the people who play around, that's what they do. Okay, what can I say? That's what they do. They are wrong 80% of the time. Okay, I don't want to badmouth other traders, but I mean, it's not a secret. It's not a secret that they are wrong 80% of the time. They don't care because they most of the time don't invest any money. Okay, they just let you play around, and they actually, it's just as if you go into a casino and they tell you what number to play on the roulette table. Sometimes it works, most of the times it won't. That's exactly the service they provide to you. I don't care about that. The most, after all the books I have read, the most reasonable, the most valuable thing that I did find for the market is Ralph Nelson Elliott wave theory, discovery. It's the only thing that matters to me. Okay, it's the only serious thing that I have seen. And I only care about it on the higher degrees. I don't care about the smaller degrees because they are too hard to see in the charts. So I only care about that. I'll take a look at a lot of indicators with you right now. We'll start right now taking a look at them, but it's for fun. The only thing that matters to me is Elliott. And Elliott wave, nothing in according to Elliott wave, nothing has changed. So I know that all the people who did not go long at 3K are now jumping around and telling you, you see, it is going down. I was right to be bearish, and so on. They're all happy. Okay? It changes nothing. It changes nothing to me. They won't go long when they have to go long. They will exit before they have to exit. To me, it is playing around. If you want to play around, if you want to have a casino in your home, and every month you play $500 because that's fun, or $5,000 because that's fun, and why not? Okay, then that I have nothing against it. Go play. You can play with it. Bitcoin is also made to play around for people who want to play around. I'm taking it serious. I'm looking at it as an investor. Okay, and I want to be long as possible, as I told you. Okay, and I only will go short if I think that going short is possible. It's possible without taking immense risk of confiscation from the governments. Okay, as long as I don't think that that is very risky right now, because the politicians won't go against you. I won't go. If I think they go against you, if I think they will seize your assets, I won't go short. I only will go short if I think the political climate allows me to go short. If not, as I told you, I rather take a loss of 99% of my wealth. Okay, but I'm a Stoic philosopher. I don't care about money. Okay, I'm only doing this from an intellectual point of view. I don't care about money. I really don't. Okay, so I mean, I care about the basic. Now I'm talking about philosophy instead of finance. Sorry for that, but I just opened my philosophic school, so I'm a bit on that tangent right now. So from a philosophic point of view, I care about basic needs. I care about having clothes. I care about eating enough so I don't feel hunger. I care about having a roof above the head. The rest I don't care about. Okay, I'm a philosopher. I don't care about the rest. I don't care about your last Lamborghini that costs 8 million. I don't care about your yacht. I don't care about your mansion. I don't care about any of that BS. Okay, I want to study. I want to be philosophic, and I want to be able to endure the markets. I don't give a damn crap about your Lambos. Okay, I never did, and I never will. Even if I will be the richest man on earth, I won't give a crap about that. So now let's, after that introduction, which was long and not what you expect, I know that. I'll try to put the link to my philosophic school in the description, but it's in French, so most of you won't be interested. And it's French because philosophy, I've always read it in French. Markets, I've always studied them in English, so I know the language, I know the terminology, I know the definitions in English for markets, and I know the philosophic vocabulary in French. So I will talk philosophy in French mainly, because that's what I have learned, and I will talk about the English about the markets in English, because the books I read are in English. Okay, now let's jump into the markets. And I can't translate everything. I try to translate. You know, there are people who tell me, but why do you write? Your Twitter is French, German, and English. Okay, they say only write in French. I say, I'm sorry, there are people that don't speak French, and there are others who only want me to write in English, and there are some guys who only want to write me in French. I can't write in every language. I speak 3 languages. I do my best. For the Twitter stuff, it's smart, it's short, so I can translate it fast, but I can't translate pages and pages and pages of philosophy into several languages on my own. I can do that on a later date. Once my book are published, there can be a translation, and I can take a look at that translation and approve it. But for now, I can't do that. If you want to read my philosophic books in English, you have to wait for a translation, and it's not on the table right now. I hope it will be there soon, but I can't give you any date for now. If you can help me with that, write me an mail and tell me how that can happen without costing me hundreds of thousands of dollars, huh? Because I won't spend hundreds of thousands of dollars to translate one of my books. Okay, let's go into the market. And there's stuff that will be published after my death. So, I mean, anyways, it does not matter. There's a lot of great philosophic authors who have written great stuff like Seneca that you can read and start your philosophic journey straight on, which is translated into English. Okay, let's go into the markets. So normally you see my warning page if everything works correctly, and my disclaimer. So as always, please take a look at it. Here is English. Then you have the French version of my disclaimer and the German version of my disclaimer. That's my internet page. If you want a consultation, you have to take a look at that and follow the instructions. Now, I'm going to take a look at the charts. I haven't looked at them. Maybe I have to reload some charts. It might take some time, but we will see. It's already looking much better since we're not at 7K anymore. Here you broke support. So what matters to me is that purple line, moving average. And as you see in the last bull market, how much time did we go below it? Here once. And I think that was the only time you really went below it, but you closed above it again. So here you did break that support, and right now we're sitting below it. So to me, that is a buy the deep scenario. You should buy the freaking deep, as says one of my colleagues. You should buy the deep. That's all I can say. I'm not expecting us to stay below that moving average, the purple one. I have no idea which one it is. Let's take a look. It's the 30. I'm not expecting us to stay below the 30 moving average for long. So to me, that's a clear buy the deep scenario in a bull market. And actually, I have to, well, it doesn't matter. I have to reload that. The numbers are not where they're supposed to be, but it does matter. I don't want to make a mistake right now, so let's go on. Let's move on. So all those were by the deep scenarios, so there were a lot of them. And now I can put one more by the deep scenario. The thing I was not sure about, I know that it was a correction, but I thought that the correction could be over already here. Okay. And then we went up, and I thought then that the correction could be over anytime here. And we broke support, but so what? I mean, the correction is a bit, it is now, I thought that the correction could be only through time and not price. Now the correction is through time and price changes nothing. To me, it changes nothing. To me, it's still a corrective move. So changes nothing. And I don't think it will last. Okay, the moving averages are fully bullish. You have the yellow one higher than the green one, higher than the red one. That's a bull market from the simple moving averages. Let's move on. Here you did break support and you have the red. Red is bearish, green is bullish, and you are red right now. So if we take a look at the last bull market, I haven't done it. So let's do it together. How much time was the bearish indication and we went below it? Here was once, here was twice, and that does not count because it was the start of the bull market. So you were twice below it in that configuration here, once and two, and twice. You can say that was the third time, but it was very short-lived, and that was the fourth time. But twice you were really below it. And this looks quite severe. I give you that. It doesn't look too good. But still, I do not expect it to last. And I expect us to be above those moving averages real soon. I do not expect us to journey into that territory for long. If we do, it's not that good. We should bounce up from here. Here you had a def cross. Here you are bearish, so negative. Here you're negative too, since up here. And right now they're really spread out. Here you're negative, you had a def cross. Here you're also negative and you had a def cross. So let's move that one over here. I'm expecting us to go higher, to be above the green line very soon, the green moving average. Momentum is negative and looking not good for now. Here you're in the red and we are pointing down very sharply. I'm not expecting us to stay below that moving average for long. Let's see how much time we spent below that moving average in the last bull market. Okay. So this is the last bull market. You were below it once, twice, 3 times, 4 times, 5 times, 6, 7. So 7 times you were below it, but it never lasted very long. So that looks quite sharp. I give you that. It looks quite sharp. It doesn't look too healthy. Let's see if there was anything similar. Did we have such a sharp decline? We had one here, but it was before the bull market started. Then you had one here. So that's the best thing you can compare it to. And just as here, you went up again and then price kept on rising. I expect the same here. But I give you that it doesn't look too healthy. It doesn't look too healthy. However, the only thing that matters to me is Elliott wave. And as we will see, I'm expecting wave 3. So there's nothing to panic. There's nothing to be scared about from an Elliott wave perspective, even if that decline looks sharp. Here we are still in a buy the dip scenario. So let's put an arrow. There was even one here last week. And we have one this week. Also here, you did not stay long below that moving average in the last bull market, as you can see. A couple of times you went below it, but we did not spend much time below it. So since we did not spend much time below it last time, I do not expect us to journey too long down here. This one is negative, negative, and negative. Quebec on the weekly looks negative, and let's take a look at the monthly. Here we are positive. My face is getting in my way. Here we are positive. On that one, we are still negative. And on the last one, it's hard to say. It looks like if it was positive, but if it's pointing down again, I would give it a flat. So I would give it a neutral. But the important one is the first one, and the first one is still positive for now because it's pointing up. And you should get the confirmation once it goes green, but it hasn't for now. Here we have, I think that's a Bollinger Band. Yes, it is. And we are below the middle Bollinger Band. Let's see how much time we spent below the middle Bollinger Band in the last bear market. So I haven't looked at it in a while, so I'll check with you guys. Here, as you see, we pierced the middle Bollinger Band, but then went higher again. It's the yellow one, huh? Here it held as support. We were below here. Here we didn't go below it anymore. So we never closed below the middle Bollinger Band in the last bull market. My head is always going, in my way. So since we did not go below it in the close below it in the last bull market, I would not be surprised if we close higher than 9,700. But how much time is left? 2 days. That would be quite a rally. But yeah, we never closed below it in the last bull market. So I would not be surprised if we close this week higher than 9.7K. Even if there's 1 week we close below it, it's not the end of the world. But we should be above the yellow Bollinger Band very soon. And that line of the Bollinger Band, the detail hold as support, as you can see. Let's go back, just because I'm thinking about something about the blue line, and I want to see what it did last time. Here it hold as support too. And here it did not even touch. So they are never identical, but without being identical, if it's a bull market, we should go above the yellow middle Bollinger Band very soon. Here we have a Bollinger Band with moving average. That is important to me. The white one, we are below it, which is bearish. We did follow the lower Bollinger Band, and now we went above the green one. Here is a stop in reverse. I think it will be taken out very soon, and then I'm expecting us to start our way up. That's MACD. Yes. and MACD is fully negative on the weekly. Let's not look at the other time frames. Okay, this is quite important to me. So we did, when we touch the yellow line, it's a buy the deep scenario for sure. So, and now we went very low. We touched the lowest line here. So that is to me a bit scary looking. Let's see if that happened anytime in the last bull market, and I don't think it did. That to me is bad news. It means that this correction is more severe than any correction here. The yellow line did hold. So you see, yes, you did have a correction, but the yellow line did hold. It was about the deep scenario and you went higher. Here again, the yellow line that I have drawn did hold. You stopped at the red one. Here you went close to the yellow one and it did hold. So we never went below the yellow one in the last bull market, and we did this time. And that is not good news. I can't say anything else. That's not good news. It means that this correction somehow, which is strange to me because it doesn't look very scary to me, but this correction is worse than the last one we did have. Then again, is it that important? No, because in the bull market before that, we touched the down one here and went higher. So let's say that we are at that point right now, and we should go higher. But that is, I mean, that is extremely oversold conditions, and I'm expecting the resumption of the bull trend. I'm already surprised that we went that low and that the yellow line did not hold. I'm surprised about that. So now we are very close to touching that that last line, and I mean if we keep spending time here, it would be a bear market again. If we keep spending time here and we don't go higher and we stay below the yellow line, it is a bear market. We have to go up again higher than the yellow line and then keep rising. If we do not, it is a bear market. Also, the stochastic indicators are negative, both of them, on the weekly. And right now, not crossing bullish. So they're still very negative looking. Here again, we have one more by the deep scenario. Here you had the last candle was bearish, and then you went lower. Bearish harami. We are right now below that middle band, RSI band. And here we're still positive. You didn't go negative. So let's see what how it was looking at the last bull market. So in the last bull market, we spent all that time higher, and here we crossed it once, but then closed higher, and we never went below the yellow line, the middle band. Also, we went red on the lower indicator histogram once. So we are still green right now. What can I say? I can say that being below the yellow moving average, or whatever that is not that good. But I would not be surprised if my face is always in my way. I don't know where to put it. Wherever I put it, it is in my way. So I would not be surprised if we close higher than that moving average or whatever it is, which is around here. I would not be surprised. And even if we close once below it, it's not the end of the world, but we should be above it very soon. And we are still bullish on the histogram below that indicator. Here we are still bullish, but we now are eating into the bullish momentum, which isn't that great, but it's still bullish for now. Here we went below the yellow line, and that is not too good. Let's see how much time we went below the yellow line last time. So in the last bull market, we went below the yellow line once, twice, 3 times, 4 times. 4 times we went below the yellow line. So actually, we can go below it without problems. We should, the bull trend should resume very soon. That's an RSI histogram. And the other ones are MACD. Then I don't know how, I don't remember how you call that one. That's a DMI. So anyways, it's not too scary that we are below the yellow line. We should go up from here. Here the momentum is still bullish, but coming to an end. So let's look at that indicator, which is actually an important indicator, the DMI to me. So let's look how much times we went negative during the last bull market. So here we went negative and then resumed the bull market. So even if we go negative, it's not the end of the world. And then stay in the positive all the time. So right now we're still positive. We could turn negative, but it wouldn't be the end of the world. And the other twos, which are, I think, the first one is a MACD, the other one, I don't remember the name of it, but they are both positive. Here we stop in reverse, which is on the 3-week, and the 3-week is important to me because in the last bull market it did help it did give a good indication of the bull trend. As long as we went bullish, it worked with one exception. So I'm expecting us to, as long as we stay above it, it's a bull market to me. And that's the case for now. Here, we did break that support. It is fractal. So we did break that support, but that can happen. Can it happen? Let's see if it happens. So here, no. Here, yeah, very close to breaking it. Here you did break it, so it can happen. Here you did not break the support. Here you did not. So if you use here, well, right now we are below it, so that's so we did take those two fractal points out. Anyways, it's not the end of the world. It happened once in the last bear market. Here, you are sitting on that red line, which is support right now, that moving average or whatever it is. Let's see if we close below. We never closed below in the last bull market. So right now we are just below it. I'm expecting us to close higher than that a moving average or whatever it is. It must be a moving average. Here we are red, negative. So let's see how much time that happens on the OBV. Let's see how much times that happened. On the OBV, last bull market, we went never red. So actually being red right now tells you that this is worse than what it was last time. I think my beard is looking badly. I haven't taken a look at it. I haven't taken a look at it in the mirror. I just see it in my camera. I think it looks good, a bit wild. Anyways, who cares? I don't. I'm sorry. I have a lot of stuff to do. If the look of my beard, or if I had time to shave my head, is that important to you? You have to take someone else. I really have no time for that. I'm a busy man and I have no time for my looks. So here, that indicator, we are below the yellow line, and that's not too good. But let's see how much time it happened last. Bull market. I'm tired. I have a long day behind me. So here it held at support. Here we went below, and the bull market continued. So there's nothing to be scared about. We can go below it, and the bull market should continue. But it tells you beyond doubt that this is a buy the dip scenario. This indicator, we went far below the two yellow lines. And let's see how much time that happened in the last bull market in the percentage R. So it happened here. You went below, but very short. Very short-lived. And that's all. So percentage R is telling you that this is horrible. It's horrible looking. It's looking very bad. But then again, when you're that much oversold, you cannot go any more oversold. It will be hard to go more oversold than that. Now, what has to happen is that we have to go higher than both of those lines and stay above it in order for the bull market to resume. If we spend time below those, if we can't go higher than the upper yellow line, that yellow line, if you can go resume price activity higher than that, it is a bad sign. It's telling you that the bear market has started and that the bull market is over, which I don't believe in because of Elliott wave. But it's looking horrible. The percentage R is looking horrible right now. It's totally oversold, but it's looking horrible. We went extremely low. That's all I can say. But not all the indicators look as bad. Here we are still negative. Yes. Here we are touching, and I think when you touch, it's a buy the dip scenario. I won't go over all of them, but here was it buy the dip scenario. Well, anyways, let's take the time to do it. Since I don't know when's the next time I will look at price, maybe in 2 months. I'm telling you, I'm not a day trader, so I don't care about the small moves. Of course, you can tell me, yes, but if I play it, I make a couple of bucks. You might be right once, okay? And then you're all over Twitter and all over YouTube telling everyone how great your calls are when you did not even take a position. It's worthless. I'm telling you, it's worthless. They are right 2 times out of 10 in best case scenario. A monkey does better than they do. So anyways, when you touch it, it's a buy the deep scenario. Or when you get close, it's a buy the deep scenario. So according to that indicator, it's a buy the deep scenario right now. Here we are bearish and not looking good. And what indicator is that? It's a net force index. And here you are still very positive. But I'm not sure that you can give too much weight into it because it won't tell you when the bear market starts. But it tells you that the bull market starts here, which is not too bad. Anyways, you can count on it on the last indicator for telling you when a bear market cycle starts. It's a rate of change, and it's looking very bullish. Here you're negative, totally negative. First one is still positive. Second one is positive but pointing down. Third one is negative. This one is negative too. And we're touching the lower line. So let's take a look at what happens when we touch the lower line, dotted line, in a bull market. So as you can see, here we did not touch. Here we did touch. It was perfect by the dips. Well, not perfect. You could have a better price, but it was a good by the dips place. Here we did not touch. Here we did not touch. Here we did not touch and did not touch. So this time we did touch. So I would think we are touching right now. We did touch. So to me, it's a buy the dip situation. That's all I can say. And the last indicator is I don't know what it is. I would call it the net force index, but it says something else. Maybe it's not that. Anyways, you're negative. Histogram went negative here. Let's see how much time that happened in the last bull market and if it was by the dip scenario. So last bull market, you went negative once, and you went negative twice and 3 times, and even a 4th time. I think even four times. Here I can't say. I have to take it bigger. Here you went negative 2. So you went negative a couple of times, and all of them were by the dip scenario. So to me, that indicator is screaming also that we are in a buy the dip scenario and that you should go long. Okay, first indicator, bearish momentum is getting a bit stronger, but the bullish momentum is still present. But we have 2 lines below it, and the other one disappeared for now. So I mean, bearish momentum is starting to increase according to the first indicator. Let's take a look at the second indicator, which is much more serious. I don't know what it is, but I know that it's more serious. It's an RSI indicator. And here you did break the last line of defense. So let's see how bad that is. To me, it's a buy the dip scenario. That's why I did put that error. But let's see how much time we went below the last line of defense in the last bull market. So we did not go below it ever in the last bull market. We did not go below it ever. So that's horrible. It's like percentage error. It's horrible looking. It's telling you that prices are very beaten down, and either we resume very fast and go higher than both of those lines, or it is not good at all. But still, to me, the only thing that matters is Elliott wave, and I don't care about the little indicators. I'm just taking a look at them for fun and to know what they're telling me, but it's looking very bad. The other one is also RSI, and it's still red. Here you had 2 by the dips already, indications. And there's no third one. I think you never had a third one, but when you well, let's see if that statement is right. I think you had never a third by the dip scenario. So here you have 2, here you have 1, here you have 1. When the red cross appears in a bull market, it's a buy the dip scenario. Here you have 1, here you have 1. So you once had 2, and the last one is 1, 2. So you once had 2, and all the other ones were 2, were 1. So according to me, price should jump higher, and that line should go green very fast, which will be positive. Here there's a lot of momentum, and there was a lot of momentum at the top. So let's say that was the top, exuberance, and here was panic stage. So according to, is that volume? I don't know if it's volume, but it looks like volume. Let's see what it is. LB, I have no idea what it is, but right now I have no idea. I have to look it up. I have no time to look it up, sorry. Anyways, to me it looks like volume, and here it was a peak, and here it is a peak. So I think that the correction is over looking at that indicator. Here you did break support, you went below that line. Now it is by the dip scenario to me. At least that's what I think. Let's see if we did close below the yellow line on the ultimate path analysis indicator, whatever that is. I care about how you read it. I do not care about the names, about the indicators, about small indicators like those ones. Anyways, did we ever close below it? I do not think so. I do not think so. Or it was very close if we did. We did not spend any time below it. So since we are way below it right now, I'm expecting us to be above 9,200 in no time. If we keep below that yellow line, it is not good news. It is telling you that the bear market has started. So once we can close below it, but we should very soon be above 9,200 in order for the bull market to resume. Oh, here we went positive. So on the last candle, we went positive. That indicator is still negative. Here we are also negative. And here we went positive. So hope is showing up on the smaller time frames. That was 6 hours. Here we did break the first two moving average. One is an EMA, the other one is an SMA. Okay, and that move on the red moving average did hold. Here you have a bullish indication of a bull market, and here you have the both golden crosses. So now, for now, there are no bearish crosses, but the bearish crosses will only happen by very late if they happen. So to me, that's not so important. What is important to me is that we are fully bullish, that the green one are above the red one, and which are above the blue ones. So let's see how much times we did break the green ones and close below it in the last bull market to have a comparison and see how bad this one is. Here we went below it but closed higher. There we pierced it but closed higher. Here went below it but closed higher. What can I say more? So we never closed below it, and now we are a long way below it. So normally we should be at 9,700 very soon, because we never went below them for extended period of time. We never closed below them, below the light one at least. So even if we don't, yeah, the light one. What can I say? It's not looking too good because we are below it and we have to go up a lot. So I'll tell you the same as with the other indicators, that that happens from time to time. It's a buy the dip scenario, according to me. That happens from time to time. You go below it, but I'm expecting the price to be above it very soon, because LU12 tells me so. Okay. We should not journey below that indicator along. This is a clear buy the dip scenario, according to me. Here the same thing, you went below it and we are below it right now. It's a buy the dip scenario. It's the first one we get. Let's see what happened in the last bull market. So that was the last bull market and we never closed below that line. So now we are below it, and we only have 2 days more left to be above 9,040. I think that's possible, and I'm expecting that to happen. I'm sorry, I have to change the ones I have in my ears stopped working. So let's take that out and put the new ones in. Batteries. Batteries not working. So I have to change them. Anyways, let's keep talking about the price. So we are below it. I'm expecting us to be to close above it. That would be perfect. If we close below it, it would be not that good, but then again, not the end of the world, because AETIUS tells me that it's not the end of the world. But we should go higher. For now, it's a clear buy the deep scenario, according to that indicator. Here, the moving averages are converging. What is it? It's an DME and ADX. So, but for now, it's still bullish. Here we're still bullish, but the red one could be above it very soon, which would be bearish, which would tell you that the bears have taken control. And here we have a red bar histogram. So let's see how much time we had a red bar in the last bull market, and if they were good by the dips in places. Here, yeah, not bad. Here you had a lot of them, and the bull market still resumed. He had one. So the last indicator is not telling you anything drop and very bad. The only thing is that would be bad if you stay below it for extended time. Then it would tell you that the bear market has started. But right now we are still higher than that, moving that line. So the last indicator is not looking bad to me. Let's look at the next indicators. Here we are, to me, we have buy the deep, because that indicator is red. In the bull market, it's a buy the deep scenario. Let's just take a look if I can tell you what indicator it is. It's an ADX. And here you have an ADX2. It is still bullish, but could be bearish very soon. Okay, first indicator looks horrendous. Let's take a look what it is. It's a distance for moving average. Okay, I don't remember what moving average I put on it, but anyways. Let's see how much times we went below it in last bull market. Here you went below it once. Well, anyways, when you did not spend much time below it, so that is looking horrendous to me. I'm expecting us to be above those yellow lines very soon. The next indicator is, I have no idea. I have to look it up. I have no time to look it up, the name. Anyways, this indicator is right now bearish. Yeah. Since we broke those yellow lines, it's by the deep scenario. Let's see how much we broke the lower line last time in the last bull market. Here we did not break it. 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 So this one is looking very bad too, because we did break the lower line. So I would say that it's oversold and that we should be higher very soon. But that's all I can say looking at that small indicator. I don't remember the name of it. Here we are having a red one. So let's see how much how much time it went red in the last bull market, and if that were good by the deep scenarios. Here you went red was by the deep scenario. Here you went red was good by the dip scenario. So twice you went red. So going red is nothing that we have never seen in a bull market. So it's nothing that should scare you. Here we are breaking the lower support. Let's see if that, I'll put by the dip here. And let's see if that was a good by the dip scenario when we broke the lower support and how much time that happens. Do we break the support of the with both lines? Yes, we do. So let's take a look at how much times that happened in the last bull market. Here you went below, but only with one of them. Here you went below with one of them, not the second one. Here you went below with one of them, we never went below with the second one. So actually, here again, it's telling you that it's worse than in the last bear market, because we are below right now with both of those moving average, I guess, that they are. So I thought that it was less severe, actually. Looking at all this, the indicator tells me that this dip is more severe than I think. I only looked at Elliott wave, and from the Elliott wave point of view, there's nothing to be scared. But when you look at other indicators, it's not looking that good. Some of them, not all. They are very oversold. First indicator is bullish and not crossing right now. Let's see if it stayed bullish all the time in the last bear market, or if it crossed once. He close to crossing, but I don't think it did. So no, it never crossed. So as long as it does not cross, it is a bull market. When it crosses, it is the confirmation of a bear market, which happened here and here in that during that bear market, and happened here in that bear market, the last one. So right now we are still bullish on the first indicator. This one is red, which is negative. So let's see if that were good by the deep scenarios, and I think they were in the last bull market. Let's jump into the next indicator because it's getting very long. Here we are touching that line. I think it's a great by the deep scenario. Let's see if that looks like it. Yes, it looks like it. Going below it would be bad news. Right now we are on the edge of going below it. Here, that cycle indicator is negative. And here we are below, the green line is below the yellow line. Let's see how much time that happened. It happened once, twice, 3 times, 4 times, 5 times. I think it happened 5 times. So going below happened 5 times. Last time they always were good by the deep scenarios. So I expect this one to be a good by the deep scenario too. Here we are still bullish, here we're still bullish, and here we are still bullish on those indicators. They are all positive. Oh, here we went negative, as you can see. The first one is still positive, and the last one is not negative for now, but it's not positive either. Just looking at how much the second indicator, this one went red, negative, once, twice, 3 times, 4 times, 5 times. Every time we're great by the deep scenarios. So this to me is one more by the deep scenario. Next indicator, here we are below the red line. Let's take a look what it is. I think I know, but I don't want to say something wrong. it's Ichimoku. It's an Ichimoku line. So we went below it, and well, going below is not that good, but let's see how much times it happens during the last bear market, and if you had ever a death cross. So here you went below it in the last bull market, and then it took you two candles to go higher again. Here you went to below it. It took you also a couple of candles to go higher again. Here you went below, and then you went higher. Here you touched, here you touched. So sometimes we go below it, and then we go higher. It's not the end of the world for now, to me. But I'm expecting us to be above 9K very soon. Here you see that we are still bullish because you have the circles above the candles. And as long as that's the case, you're in a bull market. Let's see how much, if that was without any mistakes the last time. And yes, it was without any mistakes until here. Then it told you that a bear market has started. But for now, it still tells you that the bull market is on its way. Also, the green cloud is here, and that's bullish, and you are above the red cloud, which is bullish too. Here you had the indications to go long with the arrows. So this is totally bullish looking to me. Here we are red right now. It's also an Ichimoku, I think. Yes, you're red on that Ichimoku. And let's see how much time that happened last bull market. Once here was not a bad by the deep scenario. And it happened twice. It only happened twice, so that happens rarely in a bull market. So I would say that it's a great by the deep scenario right here. Here you are above that cloud, which is positive to me, and the green cloud has started. Normally, you should keep above the green cloud. If you break below the green cloud, the bull market, Ichimoku is telling you that the bull market is over. But as long as you are above it, well, actually, if you look, if you point out, we are below it right now because the lower line is here. But anyways, I'm expecting us to go higher and then be above it once we reach the green cloud. That's a mathematic indicator, and it gave you the button here. Would have made me a lot of money if I knew it at the time, but I did not. Anyways, right now it is, you did break that support, but that's the support below it is looking as it holds. I'm not expecting us to go actually below that one or that the other one. So I'm expecting us as here, once we touch the lower ones, to go higher to get in the green territory and then stay in the green territory. So right now we still are not in the green territory, but I'm expecting us to go to be up there very soon. Just want to see if it happened ever that we went below that one in the last bear market. Yes, at the beginning, as you can see, you touch the red lines and then go higher. So there's nothing scary about it for me, looking at that indicator. We even can touch this one at 7K and it would still be looking good. NVT, I think I should stop to look at it because as Willy Woo says, it is not working anymore. Founding rate on BitMEX is negative. So people think that prices will go lower, which should be positive. It should be interpreted positively. Here, gave you beautifully the top. And let's see what I can say. It gave you that top, but it doesn't give you the lows. So it is good, a good indicator to give you the top, but it's not a good indicator to give you the lows. So it won't help you right now. Okay, I don't like much what I see here, because it tells me that support point did break. And I'm not sure that it ever did in the last bull market. As you can see here, it did not break. Here 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 it did not break. It did not get a lower low. So I don't like that. I don't like that that point has been taken out, because this one has not. This one has not. This one has not. This one has. But the bull market has not started. Once it starts, those points do not get taken out, as you can see. Once it starts, those points do not get taken out. So I don't like that we did take, sorry, I'm very tired. I don't like that we did take that point out. It would be great if we could be above it very soon. I'm not enjoying us being below below such a support point, because when those points are taken out, you're in a bear market. So I don't like that. But it's not the most important indicator to me. Here you're negative. Here you are below that one, and right now a negative cycle has started according to this. Let's see if that ever happened here in the last bull market. So here you're positive, here negative cycle starts, but the positive cycles resumes right afterwards. You do not get an extended negative cycle. You do not get that, okay? You do not get that. You do not get an extended negative cycle. If you get an extended negative cycle, it's very, very bad. And this is chandelier, I think. I'm not sure how it's called, but it's bad if you are below it. And I don't like it. I don't like it when you're here. It could be great by the deep scenario, but I don't like it. Here again, you went below it, and it was good by the deep scenario. So I say that it's about the deep scenario, but if that point gets extended, it would be very bad news, because it would tell you that a bear cycle has started. And I don't want that. I want us to, as Elliot tells me, that we are in a bull cycle. So I don't like us that we have started a bear cycle according to that indicator. Here we are below. Let's see how much time that can. So that's, I think it's about a deep scenario. Let's see how much time we were below it, and if we ever close below it, the last bull market. So at the beginning, we went below it and then went higher. But I think that was the only exception. Here you went below it, and it took you some time to establish yourself higher. But you did not spend much time far below it. Here you went below it again, it took you some time to go higher, but you did not spend much time below it. So this is looking very bad, very bad, very bad. That's all I can say. But then again, I'm expecting us to be at 9,900 very soon. So here the CME gap did close. it had to close, and it did close. So all the C main gaps did always close. So I was not sure that it will close, but it did. So now that it did, there's no point for me to look. Well, let's see if a new gap forms. I want to take it off, but let's see if a new gap forms. So this gap did close. That's all that matters. Let's take the line off and see if new gaps appear. All the gaps always closed until now. Yeah, until now. Okay, that's 88 wave. And to me, it is still looking great on the monthly. That's the most important any wave chart that I have, and it's looking great. As you can see, the correction can take quite long. Okay, here you ripple around. It takes quite long until you put in the 2. It takes quite long until you put in the 4. Here it was short. Here it was short-lived. Here, I guess it will take a little more time to put in the 2, but it does not change anything on the perspective. People say, but that is not wave 1. It is, because if you look at the lower degrees, they are made out of 5 waves, not 3. And if they are made out of 5 waves, they are impulsive. Cannot be a B market rally. So to me, that's clear wave 1, not a B market rally as some of the fraudsters tell you. It's a wave 1. It's a wave 1. They are clearly visible 5 impulsive waves. So to me, it's a wave 1 of the higher degree. Next, as you can see on the weekly, here are the 5 waves, 1, 2, 3, 4, 5. You can very clearly see them. And that is impossible if it would be a B wave rally. Then you have the corrective phase. The corrective phase is now much longer. I think I have redone that chart. Let's see if I did and what happens if I reload. I've labeled it differently. So I labeled that correction A, B, C, D, E, and then you go lower. So now we went lower, and the thing is, once we bottom, once the corrective phase is over, wave 3 should start, as you can see, on the higher degree, this one. That wave 3 should start. Here, Elliott wave looking at the 2 week, I think. Yes, it's a 2 week. I think that I have changed that chart too. So let's take a look if I did. Yes, I did. So I'm labeling it differently. Now I'm labeling it A, B, C, D, E. And if that is right, we did bottom and should go, an impulsive wave should start from here. There was some kind of triangle, and you did break below it. Now, why do I have twice the 2-day chart? I have no idea why I have it twice. I should only have it once. Let's reload this one and see what happens. Well, then it's identical to that one. Yes, since it is, I'll take it out. Here we are on the 1 day, and let's reload it because I think I have labeled it differently right now. So we have put in our A, B, C, D, E, but it's very hard to label the corrective moves. And then A, B, C down, and that could be the bottom of that chart. From a cycle point of view, we can go back to this chart. From a cycle point of view, oh wait, let's go back to this one. This is a cycle on the weekly. The cycle should be over. So the corrected waves, from a cycle point of view, should be over on the weekly. If my weekly analysis is right. It should not take any longer. We have spent enough time in that correction. Here, according to, if we compare to Litecoin did take a huge dump and Bitcoin did take a huge dump. So they're positively correlated and none is a leading indicator to the other one. I cannot tell you too much about that indicator. I'm just looking at it, and for now, there's no short indication. But here it says the long close. So it's not a long indication too, but there's no short indication. It's not an important indicator. I'm just looking at it for fun. Here we are positive, and here we are positive. When we have the red one, I think it's a buy the dip scenario. It would, yes, anyways, I'm not expecting us to go much lower. Will there be a red line forming? Maybe, probably. I have no idea. Anyways, in every time it did, it was a good buy the dip scenario. So if we get a red line pointing down here, it just would be a good buy the dip scenario. You're positive on the first indicator, you're negative on the second indicator, positive on the third indicator, and negative on the last indicator. Let's see if we spent a lot of time below and in the red territory. Yes, we did a couple of times in the last bull market, so there's nothing to be scared. Here did get a sell signal, here was a buy signal. So we are below that moving average. Let's see how, if we did ever close below it in last bull market. So no, we did never close below that moving average in the last bull market. It would be nice if I could say the same thing now, and if we could be higher than 8,700 until the end. Here we went negative on the indicators below. But even that happened in the last bear market, and it was just a great buy the dip scenario. So I'll give it a buy the dip scenario, and we'll see if my call is correct. Here we went much below it. So let's see if we went that low in the last bull market. So first here you went below it quite severe at the beginning. Then you went below it quite severe once again here. And that's all. Twice we went below it quite severely. So this one is looking very bad, but I'm not expecting us to stay down here for a long period of time. And that trend line is holding, and we are below the yellow trend line. So we have, now it's resistance. We have to get higher than both those trend lines again, and then break the upper trend line. Once we can break that one, we should be off to the races. Here the same thing, that trend line has to be broken for us to go higher. We are below that middle Bollinger Band or whatever it is. I'm not sure if it's a Bollinger Band. It's a trend line, just a trend line. So let's see how much times we went below that trend line last bull market. So we went below it once, but closed higher. Yeah, we only went below it once. So for us to be below that trend line is not good, but I think we can make it. I think we can be at 9.8K. And even if we are below it for a short period of time, I would still expect us to be higher long. A8 wave is clear, and that wave says that wave 3 starts, and that's all that matters to me. It's the most important indicator. Here you are above that trend line, which is nice. Here you are still bullish. That on the monthly is, well, we are sitting on support right now and should stay above it. If you broke below support, it would not be good because it would be a bear market indication. But right now, I would still give it a bull market indication, at least as long as we do not close below the red line. So I would still say it's bullish. Here, that one did hold as support. And we never went below it in the last bull market. Only in the bear market we go below it. So I'm expecting us to stay higher. We are still high, and it worked perfectly as support. Here we broke that important yellow line. Let's see how bad it is and how much times that happened in the last bull market. So we broke that line here once, we broke it twice, then we touched it a couple of times, we broke it here again, but we closed higher. So actually being below that yellow line is not looking good. We should be above 9,200 very soon. Here we did break the 0.5 FIB retracement. And to me, that is a buy the deep scenario. Right now, we're sitting on that FIB line. And since we break that, the next FIB, the next FIB retracement would be that one, the 0.382. But I still think that the 0.5 that we can go above it and resume the bear market very soon. So it's not scaring me too much. Just telling you that we did touch it. Here we did go below the 0.618, and that could be enough for the correction, but it was not. So since we went below, the next support is at, I don't know, 0.73 maybe, I don't know. But that's the line that counts right now. It's next FIB retracement. I'm extremely tired, so I have to stop. Anyways, the last one is the volatility index. We had a lot of volatility on the peak, and we had a lot of volatility on the crash, and it could be over right now. Here we are pointing down on the RVI, whatever that is. Rated line, we went below it, but we are already picking up, which looks positive to me. Did we go below it a couple of times in the last bear market? Let's see. We went below it once for a long extended period of time. We went below it a second time, also for an extended period of time. And that's all. And that's, I think, all. Yes, twice we went below it. So being below it is not the end of the world. Here we had a couple of red indications for a long time. And then it went green again. Here was red, here it was red, here it was red. So going red on that indicator is not the end of the world, but it is a bearish indication. Next. Here you had a sell signal on the first indicator. Let's see if we did get sell signals on the last. Yes, we did. And they were always quite good by the deep places. I'm going very fast because I'm tired, as you know, and I want to stop looking at charts. Here we went below that line and we are in red on the last indicator. Let's see how much times that happened. I mean purple, we are purple, and always it happened up a couple of times. Every time it was a good by the deep scenario. Yes, and we should be above that support line, the 0 line, very soon. Resume the bull market. Here on that indicator we are bearish right now. Negative. Here you have a clear by the deep scenario. Let's see if we close below it on the last. Once, yes, we close below it here, we close below it here, we close below it here. So closing below is nothing unheard of, but we should resume the bull market very soon, which means we should be above that yellow line, which is at 10K very soon. Here, I think it's the same thing. You're below that yellow line, the middle band, whatever that is. We went below it once, twice, but we never closed below it. Did we never close below it? I think so. So let's see. So it's looking horrible, but then again, I think that Bitcoin can be above 10.4K very soon. We went below that line. Let's see if that happened in last bear market. Bull market, I mean. Yes, we went below it once, so I expect, for me it looks like here when we run below it, or here when we run below it, but it should still be pointing up. If it points down, it would be the confirmation of a bear market. As long as it points up, it is a bull market, and we should soon be above it again, which will be 10K, which is at 10K right now. Let's put that line in. There you go. Here's the same thing. We are below it. Did we go below it at last bull market? We pierced it, but never closed below it. So being below it is bad. It's bad looking. It's telling you that this correction is much worse than I actually expected it to be. But then again, we only have to be at 9K. You only have to close at 9K to be above it again. So is that possible? Yes, I think it's possible. Will it happen? I don't know. But we should very soon resume the uptrend. If the line goes down, it's extremely bad, according to that indicator. Okay, here you did get a couple of go long indication, and it's still now telling you that the trend has resumed. So I'm not sure if that's too important, but that's what it's telling you. This indicator is still bullish. Here you have the green one lighting up. Let's see if that happened in the last bull market. Yes, it did, and it always were great by the deep places. So I'm expecting this line, this green histogram line bar to be also great by the deep scenario, and being below the white line, moving average or whatever that is, must be a moving average, is by the deep scenario. So you spend some time below it from time to time. Here, for example, it looks horrible, but then the bull market resumed and the candle looked better on the close. So let's see if what happens right now. Let's see where that candle stops. If we stop, if the candle closes at 9.5K, it would look perfect. But right now, I would give it still a buy the deep scenario on that indicator too, because I'm of the firm conviction that we are in a bull market. So all those dips to me are just buy the deep scenarios. May I be wrong? Yes. I mean, if elite wave is wrong, I'm wrong, but I don't expect elite wave to be wrong. I think you have never seen elite wave to be wrong, so I do not expect elite wave to be wrong. The yellow line, did we close below it? Here we pierced it, but closed higher. Here we closed very close to it. Here we closed below it, then went higher. But right now it looks horrible. It looks horrible according to that indicator. Here we went also below the yellow line, which is a buy the deep scenario. But how much times did that happen? Sometimes it happens. Yes, it happened a couple of times in the last bull market, so it's not the end of the world. Here you're negative. That's not looking too good. It's negative. Here you broke that line, which is important, and it's at 9.4K. Let's see if you did break it a couple of times in the last bull market. So you pierced it, but rarely closed below it. At least it did not look that bad. That looks bad. I give you that. It looks bad. It looks bad. First indicator is positive. This one, we broke the lower line. So according to me, that's a buy the deep scenario. Let's see if we did break a couple of times that line during the last bull market. Here we touched it, but did not break it. Here we touched it, here we touched it, did not break it. So we never broke that line. We are breaking it right now, which is not good. That is not good. It is telling you that the correction is severe, worse than what I thought before looking at those charts. The last one is red too. Let's see if that happened in the last bear market and in the last bull market, I mean. Yes, it went red, but then it went green, it went red. It was great by the deep scenario. Here it went red again, and then it went green. Here it went red. So sometimes it goes red and then goes green. So this is not looking too bad, and I would just give it a buy the deep scenario. Here we touch the green line. Don't know what it means. Don't know too much about an indicator. Won't spend any time on it. Crypto fear index. Extreme fear. And interest in Bitcoin. Picking up. And here, that's a FIB retracement. We touched the lowest FIB retracement. think it's a fee retracement that I've put on it. Yes, it is. So touching the 0.236 line. Is it that bad or not? Don't know, but I don't. It just hold as support, and if you go higher, well, then we go higher, and the correction is over. Here we have a low triangle. We did break the triangle, and let's see what happens now. The stock market is still looking fine. Okay, I've done what I wanted to do. So my conclusion is the same as always. I mean, I'm not going to look at the elite wave because I won't find it straight away. I have too much pages open, web pages. So I'm not looking for it, but elite wave tells you that wave 3 is starting, and I trust elite wave. So to me, this is just a buy the dip scenario. Thanks for watching and see you next time.